Surf's Up. Learn to ride the F&O waves only on Bloomberg Quint with Agam Vakil.
Hello and welcome to Surf's Up with me, Agam Vakil, on Bloomberg Quint. And just like always, we're here to get a perspective on the futures and options markets in Indian equities. The Nifty 50 index has retreated from lifetime highs, now back below the 9,500 mark. But what are the factors that govern current market positions? 1. Maximum open interest remains between the 9,300 put and the 9,500 call. 2. The India Volatility Index has surged substantially today, now back above the mark of 12. And 3. FI activity may have remained subdued in the last handful of sessions, and we are looking at just as many long positions in index calls as index puts. However, FIIs do have twice as many long positions in index futures as compared to those on the short side. Do remember, we are heading into expiry next week. So what do we make of these variables and where are markets headed? Let's find out. Joining us today and guiding us through these waves of open interest this week is Manoj Vayalar, Vice President Derivatives at Religare. Thanks for joining us, Manoj. And starting off with your Nifty, what is your view over the next 1 week?
Thanks, Agam. Agam, I believe that it is the Bank Nifty which generally dictates the trend in the Nifty, because if you see the Nifty has rallied from this 8,000 to almost 9,500, and it is on the grounds that the Bank Nifty has caged a very spectacular support on that, because that is one sector which has got the highest weightage, close to 34 to 35% India Nifty. Now, the last 3 to 5 sessions, if you see, the Bank Nifty has not been really adding any fresh long positions, wherein the Nifty has managed around 3 to 5% of fresh derivative money in terms of index futures long built up. But then we believe that the last trading session, if you remember, there was huge buying in the 9,500 strike put option close to 15 lakhs, and there was an addition of close to 3% in the Nifty. So we believe there was some protective put strategy which has happened. And because there is no fresh long which is happening to the Bank Nifty, we are seeing some profit booking in the Nifty. So as you rightly said, the VIX is up. VIX is at around 11.2, and we believe the Nifty would be in a range of, let's say, 9,400 to this 9,550 range. And because we have the expiry next week, and since as you speak about the highest open interest, and in the Nifty side, if you see, the 9,500 strike still remains active, where we have seen huge built up even in today's trade. If you see, 9,500 strike is added close to 10 lakhs of open interest, with the white totaling up to around 62 lakhs, which is quite a decent amount. So we believe the Nifty might be in a grinding session. Closer to 9,400, it becomes prudent to go long for a possible 150 odd points on the Nifty. But we believe there is no downtrend in the market as of now, because the top for the Nifty might be only closer to 9,700. So we still have a 200-300 more points in the Nifty before we can actually think that the Nifty is topping up. Needless to say, the FIs have been putting in money in terms of arbitrage, which is when they buy in the cash market and they sell some stock futures to offset this fresh buying which they generally do.
All right. So based on your observations, you are suggesting that people can go long as far as the 9,400 levels concerned. But what is your call on the Bank Nifty then?
Absolutely. Now, again, we work on this concept of volume weighted average price, which simply says that whatever derivative long built up is there in this indices, it has got a weighted average price for the month. So generally, we say that every time the indices correct till the weighted average price, that is where we would recommend that, it becomes a good support and we can see buying which is happening. Now, if it is in case of the Nifty, we believe, it was 93.80 or somewhere close to 9,400, that we believe there can be good support, and then it becomes quite prudent to buy the Nifty. And in terms of Bank Nifty, the levels would be somewhere close to 20 to 500 on the future. So let's say 250 points on the Bank Nifty from here, it becomes a prudent level to go long for a target of at least 23,600. So roughly we would attribute an 8 to 900 points of long positions in terms of target, but closer to 22,500 on the futures is where we recommend going long for a target of close to 23,400 to 500.
Great, Manoj. So coming down to some stock-specific action, do you have any long or short calls from the current market levels?
Yeah, absolutely. We were favoring pharma for the last 3 to 4 sessions because we believe there is money which is flowing in. And especially pharma has been underperforming in the last 3 months, and we have seen some money coming. So Lupin topped the list. If you see, Lupin is currently at 13,1310, and we expect the stock has got good momentum still on the upside. Immediate target would be somewhere close to 1352 on that. And we even like Granules India. Today we have seen good long built up because we're seeing cash buying as well. So we believe around 168 to 172 should be the levels where we might see some distribution. Now, because there is some profit booking in today's trade, IT has seen some buying coming in. I would still say NIT Tech tops the list. We can buy that. Currently, the stock price around 530 to 531. We believe at least a 14 rupees close to 544 to 545 is what we can see as a target in that.
Okay, there you have it. Calls on Lupin and NIT Tech. But I'm going to come down to Derivatives 101. And once again, I want to remind our audiences that we are open and inviting questions. The question for this week, Manoj, is from Rahul Shah. And he asks, when can one buy a call spread?
Right. Now, see, the most important aspect that we all need to know is derivative money has got an M2M taking to it. If the instrument is a future, then you have your M2M in terms of underlying movement. If it is an option, it is in terms of a time value. So if I simply say that if I buy a Nifty future, let's say at 9,400, the very second that I buy this, I am eligible to an M2M on the positive or on the downside. But then when I'm buying a 9,400 call option, obviously the time value till the expiry. Now we all know that expiry for this month would be next week Thursday. So that is around 25th is when we have the expiry. So close to 7 days is the time value which is left. Now the question here is, when would you do a call spread? Generally, when you have a view on the underlying, that is, you're expecting a limited upside, let's say maybe 2 to 3%. Let's take a scenario that for the Nifty we advocate 9,400 as a level to buy, and let's say 9550 is where we feel there would be some distribution. So if the Nifty comes to 9,400, we would recommend buying a 9,400 call option, and at the same time we would recommend selling a 9550 call option. Now, ideally, what happens is there are two main things which happens to a call spread. When you do a call spread, the premium automatically comes down. A 9,400 call option, which would otherwise cost me around 110 rupees, would ideally, because of a call spread, come down to around 70 to 75 rupees. So I save 25 to 30% of my premium towards the expiry, which is more susceptible to the time value. So that helps me. And second, the volatility index. We all know that the VIX, or the implied volatility, it plays a major role in the option premium. So when I do a call spread, the increase in the volatility will help me in the favor of 9,400 call option, which is at the money, and out of the money call option, which is 9,550, has a greater component of implied volatility. So that would act as a hedge. So if I have to simply answer this question, a call spread is done when you have the view of a limited upside on the underlying, and when you feel that some amount of premium can be reduced by taking the same position. So at a lower cost, you can get into the same view, but then with a limited upside.
Well, Rahul, I hope that comprehensive explanation answers your question, but that is all that we have for this week. Manoj, thank you once again for joining us.
Thank
and
you.
as for you guys, we'll see you next week once again on Surf's Up, only on Bloomberg Quint. Stay tuned in.